So let me welcome you all to this session on the Charity Bank at the Northamptonshire Virtual Funding Fair, because it's North and West Northants now, of course, brought to you by the Northampton Development and Funding Workers Network, which brings together a partnership of our local infrastructure organisations, which I'm part of, local authorities with grant schemes and funders, of course. So everyone on mute while we hear the presentation from Lee, and do use the chat box for questions and answers, or the answers will arrive once you've asked the questions, of course. At the end of the session, we'll send you a feedback form so you can tell the others how terrible I am and mumbling my words. But anyway, so this session is all about Charity Bank, and I'm sure Lee's going to put us right here. Some of us may have assumptions that charities don't take loans. I'm sure you've heard that before, Lee, and you'll put us right as to how you fit into the picture. So without any more ado, Lee, the floor is yours.
Okay, brilliant. So I'll try and share a screen. Now, me and technology is not a good mix, so let's see if this goes right or wrong. If I just click that button there, let's okay.
Yeah, it's arriving.
That kind of working. Let's have a look. Has that worked?
It has. Perfect.
Wow, hang on, that's the first bit done. Right, brilliant. Thanks for the intro. I'd just like to say sort of thanks, Sean and Sharon, for inviting me along here to have a talk today, really. So if anybody knows me, that's good. If not, I'll just tell you a little bit about who we are, who I am, and generally then have a little bit of a talk around, in general, asking for finance, just some sort of hints and tips. I think we're going to try, and my head will be buried down here, so if anybody wants to ask any questions, I think we're going to probably hold it till the end, do you think? Or
yes, I think so.
Yeah. Fine. Yeah, good. Okay, so my name's Lee Jagger. I'm one of the regional managers for Charity Bank. I work as part of the North team, so forgive my accent. I am from Yorkshire, but I live in the Midlands. I live down in Birmingham, so I generally work across the whole of the Midlands, really, but share with two other colleagues the rest of the country. So we work as a nice little team of three. For anybody that doesn't know anything about Charity Bank, like I said, I'll give you a brief overview of who we are, the sort of things we do, and we'll have a little general chat around asking for finance and lending money or sourcing loans from banks, and social banks, not just Charity Bank, but social banks in general. So Charity Bank was born in the early sort of 2000s as a bank, with investment from sort of big society capital and some of the country's bigger, larger charitable trusts and foundations. So I've put a screen on there, and you can kind of see some of the sort of bigger investors in Charity Bank. The bank, I think the sector decided that it wanted a bank to provide services and to work within the sector, hence sort of Charity Bank came about. So who are we? So we consider ourselves a sort of trusted partner for loans and savings. As a bank, we are sort of fully regulated and fully licensed, like any high street banks, like Barclays, HSBC, etc. But we do have a different sort of funding model. So we don't have any sort of complex wealth or treasury operations. We don't buy money in from money markets. We operate pretty much like a credit union. So we will take investment from our investors, our shareholders, who are the people on the screen in front of you, and also deposits that charities hold that want to invest their reserves that they don't need, that they're sort of to cover running costs. So individuals, limited companies, anybody really can save and put deposits with us. We then take that money and lend it out to charities, social enterprises, and socially minded organisations to create social impact and purpose out there. So when people do put the deposits with us, they can sort of be guaranteed that it's going out there and doing something good in our communities out there. So since inception, and these figures are based on last year, so this will increase since now, but let's use these figures. So since inception, we've actually sanctioned and provided over 1,000 loans, totaling over £250 million. Our loan book probably stands around £270 million at the minute, which in banking terms is probably fairly small. In the sector, that's quite a substantial amount of loan finance out there to charities, social enterprises, cooperatives, and any sort of organisation that has sort of social impact and purpose. as you can see from there, all our shareholders are social purpose organisations. The bank's goal really is to help the sector and organisations within the sector thrive, which is really the core of everything that we do as a bank, really, which is a little bit different, I suppose, to your high street counterparts. This screen here, very quick, just sort of shows you the concentration of where our money's been lent across we do cover the whole of the British Isles. And you can see there's quite a big concentration down in London, the south, east and southwest, but then we sort of spread around sort of Yorkshire, northeast and the Midlands as well. These slides are going to come out, I think you said, Sean, so we can people can have a look at this at their own time, really. It's more just to give you a bit of context, really. So since the start, this is sort of the areas of the sector where a lot of our money is lent into. We do work a lot in the faith sector and predominantly in social housing, whether that's with larger social housing providers or smaller charities and organisations that are providing social housing, affordable accommodation, affordable homes, supported living. Yeah, so there's quite a different sector. There's nothing that we've probably not seen or not worked in at some point. Okay, so what makes us slightly different to the high street banks? So really, it's not just about the figures. It's not about looking at black and white sets of accounts to see if loans are affordable. That is a key element, and as responsible lenders, a charity bank or a social bank are not going to look at lending money to an organisation if it's going to put them in financial risk or jeopardy doing so. Where I think charity and the social banks come into their own is really around understanding accounts, understanding sort of funding streams for charities and organisations, because it's a totally different scenario looking at a set of accounts for a charity than it is for a trading business, as a lot of high street banks potentially do. So we like to think we're a committed partner, so I suppose that means we care about the aims and share the values and goals of the organisations that we work with. Our governance, if you strip out the banking element and the regulations we've got, our governance is probably very similar to the majority of clients that we lend to. We are in fact a social enterprise. I think we were the first bank in the country to be officially recognised as a social enterprise, which is a little bit, which we're very proud of, to be fair. It's all around the relationship and the people as well that you work with. I think because we're not at the scale of some of the high street banks, we've more time to offer that relationship management service, so we can hold hands with organisations and talk people through a process rather than just throwing a load of numbers into a machine and getting a yes or a no from it, really. And that relationship part of it and that one-to-one correspondence really comes into its own in times like COVID is probably the biggest example we can show, and I'll talk more about that further down the line. But so we do consider ourselves a social sector specialist. The bank has been around, like I say, since the early 2000s, so you've 20 plus years worth of experience within the bank in supporting various sort of charities and organisations over the years. I think a thing for us from a specialist point of view is the relationship management and the people that work in the front line for the bank have got vast levels of experience. I mean, I am probably one of the least experienced regional managers, and I've done 27 years in banking, 10 years banking in the sector. You know, there's people in there that have done 30, 35 plus years. So there's probably across the team and my colleagues, there's probably not something we've not seen before somewhere. So it's quite an experienced team. Okay, so I think I touched on this very slightly before as well. We try to make things as easy as possible for an organisation that wants to look to borrow money from us or lend money from us, should I say. So it may be quite a daunting proposition for some charities and organisations that have never ever had to source finance from anybody before, and we get that, and we're quite happy to kind of, like I said before, hold hands more and spend more time in talking people through a process. And it's all because there's minefields with everything from legal due diligence, depending on what you're trying to do, etc. So we try to make things as easy as possible. By just talking to people and having conversations with people, ultimately, the easier we can make it, and the more guidance and support we can give to clients can potentially reduce costs over the time anyway, so they don't have to go source additional professional advice or whatever recommendations at an extra cost. And that supportive bit, I suppose, filters into not just, I suppose, around the good times and then implying for finance because you've got a project that you want to buy a building, you want to fund something, which is quite an exciting journey for a lot of charities and organisations. It's not just about, it's about the bad times as well when things maybe don't quite go right, and there's scenarios that you'll see my time in commercial banking when you have to call in security and sell security and sell asset, and it's not a nice thing to be in. However, how we want our clients to think that they can work with us, and they do work with us on this basis, they can tell us anything, and that's the key to the relationship as well. So if, as soon as we find a client's got an issue or a problem with something, we want to know because we want to be able to help, and it's all around trying to help to keep everybody up and running and operational, rather than thinking, quick, how does the bank get out of this? That's totally not what charity bank or any other social bank is about. It's more around the client and the services that are potentially impacted if there are issues within an organisation. And again, COVID is probably again a good example of this, when we hit the first lockdown and the bank just shut all new lending down and went into recovery mode to support its existing clients, to give capital repayment holidays, full repayment holidays on loan finance, until people sort of understood where government grant money were going to come in to help and support. And it's just things like that, rather than, you know, thinking how as a bank, you know, we've got security, how do we get repaid and get out? Again, it's not about that. It's about the organisations, and more so the people that are impacted by the organisations that we work with, that we need to support. So loans, we don't have a standard product. As you can imagine, the sector is a weird and wonderful spectrum of different sorts of organisations trying to do different sorts of things. So trying to fit a standard mortgage product or a standard commercial loan into it just doesn't work. So everything we do is bespoke. We do have sort of terms that we base things around, but we're quite happy to have conversations and look at any possible proposition out there, rather than trying to fit people into a box, or you've got to be able to do this or not, sort of thing. And it's one of those things where we are open to any idea or any prospect or project or anything that anybody wants to talk to us about. And if it is that it's not for us, we will signpost to other banks, or the social banks, or the social funders, or anybody out there that we feel will fit the criteria what the organisation is looking for. I'm just going to jump a few screens now because I've got them in the wrong way around. There we go. Okay, so the screen that we've got in front of you there, Resilience and Recovery Loan Fund, is just what I wanted to touch on around the sort of bank's COVID support, really. We were part of a scheme that Social Investment Business put together to get some money, just like the CBILS money that was out there in the commercial marketplace. We were part of the scheme for the sector to try and get emergency money out and emergency loan money out. So we were part of this, and we put over, just the last applications have just finished going in as of last month, but throughout the whole course of this, we got just over £11 million worth of money out there in emergency funding to clients, which is quite a substantial amount of money, and we were quite impressed and proud with what we did with that. It was very similar to the sort of CBILS criteria. It's short-term money, the government pays the first sort of 12 months, etc. And then we put a term on the end of it. That's just, so we put that in conjunction with providing capital repayment holidays and full repayment holidays, just to sort of help our client base through. I think we found, if we sort of look back when COVID first hit in the first lockdown, when we hit June, July time, and government support was flowing, and we started to see a lot of organisations that we thought might struggle and really struggle actually flourish and come through quite well. And hand on heart, we can touch wood, we didn't lose a single client again, which we're quite proud of. And you know, that's quite an achievement really in quite testing times. Aside to Resilience and Recovery Loan Fund, we do work with other organisations. So we work with REACH, or with the Access Foundation, to work with the REACH Fund grant. So if we've got organisations that want to apply for loan finance with us, we're an access point for those organisations to go source some grant funding, to help maybe put the business plan together, to help do some sort of feasibility work, etc., etc. So it's non-repayable grant funding that's there to supplement people being investment ready or becoming investment ready to actually come to us and apply for money. And obviously, working in the sector, you tend to find a lot of organisations work in conjunction with each other rather than in competition. with each other. So I'll do very briefly around sort of our terms and what we look at. So as a bank, we will look at loan finance from 50,000 up to about 10 million. Anything above 4 million is our sort of upper counterparty limit, but we will work in conjunction with other social banks and other funders to collectively put syndicated loan finance together. And we tend to find we do that on some of the larger new build housing propositions that we might work with social housing providers. And you know what, we're working with other social banks, other social funders is quite common practice for us, really. And it helps, you know, it spreads the risk. It means we get more reach out there into providing the support we need to do as well. As I said before, our sort of loan finance is very bespoke. We have our sort of standard terms, but everything fits around them. That's fine. We will look at lending up to 25 years. That has just been extended as of this week to 30 years in some instances for certain type of assets, primarily sort of residential property, because it kind of ties in with the residential mortgage sort of rules. This is a big one for us. We do provide development finance. So not a lot of banks, even social banks, do this. It tends to be left to more specialist providers that tend to be really expensive. So we will provide development finance to help an organisation build a head office building, build a community centre, build a place of worship. Predominantly it's social housing, again, affordable housing. But we don't just do the development finance. If we want to be committed into a project, we want to be in there for the long term. So we will provide the development finance and then convert it across to normal term debt at the end, tying into the 25 or 30 years. Because we were created via the sector for the sector, we try to keep our loan documentation dead simple and as easy as possible. And we're not there to make substantial profits for shareholders. The bank's purpose is to cover its costs. As long as it gets its main focus is social impact and lending its money out to create impact in communities. So one thing that we are quite keen on is that last point on that screen there, where we sort of say that there's no early repayment penalties. And so we can work with an organisation that might get some legacy money left or access to, it builds its reserves up and wants to reduce its loan, whether in lump sums or in one go. But by making a lump sum repayment from its own sources or its own funds, there's no charges whatsoever. Interest calculated on a daily basis. So we just try to keep that nice and simple. And that is a sort of key selling point, if you want to call it that, for charity bank. And you'll find most of the social banks are exactly the same as well. The only time there is a charge is if an organisation takes a loan with us and refinances it with another bank within 5 years. Outside of 5 years, again, there's no repayment penalties or early repayment penalties. Okay. So I'm just going to jump back up to this one now. So that very quickly is sort of charity bank and a bit about who we are, what we are. There's a little bit more further down, but I just thought I'd touch on sort of general points around lending and lending from banks or social funders. Oh, I've just lost that. So this sort of screen here, we've touched on really what's the difference between high street banks and social banks. I think if an organisation is wanting to source finance, it's decided it's got a project, it wants to buy a building, develop a property, it's got some reason it wants to lend money. The first point of call should always be its bank, its transactional bankers. So you would think in most cases that's going to be high street banks. I think then you can sort of look at the social banks. Now, we as a bank don't do transactional banking, we're purely deposits and savings, but deposits and lending. Some social banks do provide transactional banking. I think there's a and then so if you look at social banks and then look at social funds, which are social funders. So there's people like social investment business and lots of other people and organisations like that. However, there's a line that probably sits in between there, really. So we work in conjunction with a lot of community development finance institutions or responsible finance providers who aren't quite banks but are social lenders. I'm very good and very active in the sector and very specific around helping organisations that are maybe new startup charities and organisations that are looking for funding that even, you know, the social banks potentially might not be able to fund because it's too early in the stage of a charity and it's in its growth or its trajectory. So there's a lot of social funders there with responsible finance providers, the CDFIs as we call them. And we tend to find, if you look at that there, the social funds, there's bond markets, crowdfunding, we tend to find in a lot of cases as a bank, we might be part of a larger funding package. And it's quite common practice for us to be involved with another social bank or a high street bank, and or some of the responsible finance providers and grant funders. So we might be heading up a consortium of people that are lending. So again, probably slightly different to high streets where people tend to compete with each other. Social banks and social funders and responsible finance providers all tend to work in conjunction with each other, and it works really, really well because we've done it for quite a long time. So why you use loan finance? What do people need lending for? It's what you do to develop, buy or refurbish property. You can ask a bank, or a social bank tends to be for that, because most social banks are secured lenders. Refinance of the borrowing, again, banks or social banks. Bridging receipt of delayed funds. Maybe more cash flow support, which ties in with the one below, which tends to be run on maybe an overdraft or unsecured lending. To invest in new activities and develop new income streams, maybe more so social funders or grant funding. And as I just mentioned there, to form part of a match funding package or a consortium of lenders. Where we see a lot of this is with the social housing providers that we work with. So we might get a lot of Homes England grant money that goes in. We'll provide matching loan debt to that grant to allow an organisation to go and build and develop a lot of various sort of residential properties. Which ties in again with supplementing grant and donations, really. So what we've got there is just 8 tips for dealing with lenders. So I suppose, excuse me, I suppose what we're sort of saying there is, if an organisation's decided that it wants to take money or take a loan from the bank or a bank, and it's going to come to me, somebody like me, and ask for the funding, there's just some sort of ideas of the sort of things we're going to be looking for. That first one there says make early contact. This one, I can't sort of emphasise this enough, really. This is very key for us, and sometimes organisations might come to us too late or quite a far way down the process, and at that point people have committed to costs or committed to contracts or anything like that. Whereas if people have a conversation, organisations have a conversation with us sooner rather than later, we can maybe, because we will have seen other organisations that have done something similar, and we can kind of go through the pros and cons of it and give as much guidance and advice as we can to kind of save costs and time in the long run, really. So the prime example of that is somebody that is looking at development finance. Sometimes we do get people come to us that they've gone through the feasibility, they've paid professionals to do all of that, they've found a contractor, they've signed a construction contract, and then come to the bank and say, can I lend some money to build this? Well, that construction contract may not be in the right form for the bank, which means it needs to be rewritten, including incurring additional legal costs, etc. If somebody comes to us early doors in the process, we can look through a contract before it's signed, give our sort of advice, guidance and opinion, and say, actually, it needs to be in this format before you take it to get it finally drawn up, which could save some substantial costs down the line in legal fees. So that's just one example, but there's many like that. If you look at the next one that says consider a social lender, they should have a better understanding of the social sector. I couldn't agree more. I think the key thing there is being in the sector, working in the sector, is understanding financial accounts. Something as simple as understanding that an organisation might run to a deficit because it's had to spend its money before it gets its grant money in to cover a contract, for example. Maybe that's not sort of seen if somebody's just looking pure and simple at that, or there's a loss there in those trading accounts. So I think it's just simple things like understanding accounts is key, and how funding structures work really within the sector. We've touched on before, sometimes several lenders working together may be required. It's quite a regular occurrence that we had a consortium, or we are part of a consortium of lenders that will work to provide funding packages for organisations. And we're quite happy with that because, again, anything that we're going to do and anything that any social funder is going to do, the ultimate result at the end of it is there is impact in community. So somebody's going to benefit from it, from what we're trying to do somewhere down the line, really. ask colleagues for a recommendation. This is a key. This I'll use this word quite loosely. This sector is fairly incestuous. It's quite sizable, but you know what? Everybody knows somebody in here, and somewhere everybody will know somebody. And it's just somebody will have worked with us. We're quite happy to sort of put a list of case studies on our website and say, you know what, speak to these people before you even want to look at talking to us about loan finance, because they'll tell you the warts and all story of how we work, etc. And people, most of our lending on new clients come from referrals from existing clients and or trustees that have sat on a trustee of another organisation, etc. Go to the bottom screen that says "Don't fear rejection. Different banks have different criteria." That's right, and that ties in with the box above, really, where we're looking at making early contact. If we are working with somebody that wants funding for a specific project, but it's not quite what we do, we can then signpost to somebody that we know will fund that type of project, whether it be a social bank, a social funder, or anybody else. So that key there is conversation, and sort of conversation early doors, really. Find out about timescales. It can take you longer than it might expect. 99 times out of 100, it's probably going to take you longer than anybody expects to do any sort of transaction. We're kind of not living in the commercial world tends to move quite fast. The sector, we try to move as fast as we can, but sometimes it's the complexity of the assets that we might be funding or trying to develop where there's potentially hidden covenants on properties, for example, that might take quite a lot to unwind. It's not slow, but it's not as fast as the commercial world. Like I say, it tends to be more the complexity of the assets that we're looking to use as security. But there's things you can do around that to speed it up, and we will walk through with a client how you can speed a process up from getting valuation reports or dealing with solicitors, etc. This ties into conversations again. If there seems to be a delay, contact your lender straight away. That's not just us, that's anybody. If there's anything that jumps out at any organisation, or there's any issues, any problems or concerns, it should be as easy as pick a phone up to your bank manager and have a conversation. It's fairly old school, but it's how we like to work, really. And I manage my own portfolio of clients, so they've all got direct access to me. If they've got any issues, I'm made aware as soon as I need to know, so we can help, essentially. That last point there, that get professional advice to read the loan offer. If we've gone through the process and we've done the whole assessment and we've issued our sort of key commercial terms or our loan offer document, it's always, we part of what we do is give this to your professional advisors, your legal advisors, get them to scrutinise it and do what they will with it and come back, because ultimately an organisation is not doing its own due diligence thoroughly if it's not had an assessment of its loan documentation before it signs and commits the charity of the organisation to that sort of loan finance. It's worth noting our documents, as with other social banks that I've worked in the past, were all put together by charitable arms of large solicitors and law firms. So they're all very focused around, one, the bank to protect it, but two, the sector. It's like I said before, we try to make things as simple and as easy as possible for clients, really. But it's a big must that people, before committing to any sort of loan finance, sort of have a due diligence check on it. Now, okay, so jump down a few more pages now, right? So, and this sort of ties in with some of those 8 points, really. Me as a lender, what do I look for? Evidence of the demand for what you wish to provide. I think what we're saying there is a good example. If an organisation comes to us and says, we want to buy this building because the income that we can get from this by renting out this space or doing this or doing that with it is going to increase our income 100, 200, 300%. And the sort of question I'm going to come as this says, is how do you know that? Why? What research have you done? Have you got sort of case studies? Have you sort of looked at this? Has anybody done any feasibility on it for you? Because you've seen various organisations that will buy a building and it won't do what it said it's going to do at the end of the day, sort of thing. So, but this is all around the sort of conversations where we'll guide people through a process. So all the things that you can look at there around well-developed plans, evidence of affordability, good governance, provision of financial information. All that really ties up into a business plan, and whether that business plan is in one document or in various documents, as it may be in this case, it might be your financial accounts there, your projections are there. It all ultimately comes into being a business plan. Now, from our point of view, the figures are the figures, the black and white figures are whatever they are. What's as important as that to us as a social bank is understanding the people behind the organisation as well. So as I say, figures are figures. They either work or they don't work to prove serviceability, affordability for a loan. However, if the figures are kind of borderline, yet the people behind the organisation are very experienced in what they do, and we feel confident that they've got the ability to do what the projections, for example, say they're going to do, we will take a view on that, and we will support the organisation because of the people that are there behind it. And that's a big part of our credit applications, to be fair. It's an assessment of the people rather than just the figures. Touching on business plans, over the years we've seen sort of various sort of versions of business plans, and I think the only thing to say on this, and this is probably a workshop in its own right really, is I think less can be more. As a lender, there's nothing worse than having a 20, 30, 40 page document put in front of us with lots of nice charts and everything in there showing us what this project, if we've not got buy-in or understood it after that sort of first couple of pages, we're going to struggle. And organisations have gone to putting a lot of money and a lot of time and expense into there. So I think key for us is, as a funder, is who are you as an organisation? What do you want to do? And is it affordable really? And then we can filter everything else in around that. Okay, so key things to look at, again, all tying into the same sort of scenario really, is, and considerations for people that are looking to take loan finance, is look at interest. What interest rates are you going to pay? Not just the rate you're going to pay, but is it fixed? How long is the terms for, etc. Fees is a big one for us. We have a lot of conversations around fees because some organisations might think it's worth looking at asking for loan finance, but not realising that there are costs incurred for professionals, for solicitors, for valuers, etc., for planning, for professionals to work with business plans. Security is a key one. It's kind of what sort of lending. If you're looking to buy a building, that building then becomes a security for the loan. If you're not buying a building, but you've assets that you want to use as collateral to support the loan, again, it's just conversations to have really, and thought processes to have. Commitment is another one. Knowing when, or considering when, an organisation have gone through the process. They've got the commercial terms, they've signed those, they've done all the due diligence on it, they've signed those and sent them back. At what point does that organisation commit itself legally to taking the funding? Generally is when that signed legal document comes back. But again, it's talking people through the process so people have a step-by-step guide and understanding to the whole sort of journey really. Covenants, default, that sort of touches on what happens really if things go wrong. We touched on that before. The bank will take security to support a deal, but it really is its last case scenario if it has to call upon that security. The bank, to my knowledge, in all its history, has never had to call upon an item of security. It tends to want to work with organisations in the first instance, which is what we're there to do anyway. And if it means repayment holidays, capital repayment holidays, that's what we will do to help an organisation through. Ultimately, if there is no other way through, we will work with an organisation to agree a sale of an asset, but that's not really in everybody's best interests. Covenants, when you're looking at lending, we tend to keep these really simple and not too onerous, which probably again sets us aside to sort of high street banks, which want everything sort of belt and braces really. That's it, I suppose, from that bit. So if once you've gone through the process and you take a loan from us, you then sort of filter into our sort of figures and statistics. So it's quite interesting because we tend to try and analyse everything we can. And if you can see there, that first sort of little circle with the 81% in it, it sort of says, so that's 81% of projects would never ever gone ahead without the loan they took from us. You know, that's a lot of people that would have been impacted or not had the help support out there that they could have had if they hadn't taken the sort of loan funding from us. 57% borrowers borrowers reported improved financial planning. Part of the after loan process is ongoing provision of financial information. So we will ask on a quarterly basis for organisations to provide management information to us, just so we can keep an eye and monitor how performance is going or trading is going in comparison to the covenants that are set on the loan. Now, it gets people into a really good mindset of, most organisations will produce these figures anyway to give to trustees in board meetings. It's just a case of thinking, oh, we've lent money from the bank are going to want these figures, we will make sure we get them together and get them across. It just sort of focuses people a little bit, really. And the bank's not, how do I say this? The bank, there are sort of timings for this provision of this information. However, if an organisation is a day late with it, the bank's not on the phone saying to them, where is it? It's very lenient. You know, we understand a lot of organisations have got volunteers that are producing these figures, etc. That last screen there, it says 78% of borrowers improved quality of services of facilities. A lot of loan finance that we do will be for refurbishments or upgrades to existing facilities as well. So it's just some good figures, really. Where does our money come from? Where does our money come from? So I said we're a sort of savings and deposit bank. Like I say, we don't buy in from money markets. We don't buy in from other banks. We use the investment from our shareholders and the deposits that our investors put in with us. So whether it be, like I said before, individuals, businesses, charities, social enterprise, anybody that deposits with us are the funds that basically we take out and lend to create social impact. That's about it for me, sort of talking constantly about what we do and who are we. I've just thrown a couple of little sort of case studies in there to give you an idea. I've probably had a little bit more context around the types of organisations that we work with and support. So, transforming lives for good. So from school exclusion to low emotional well-being and holiday hunger, the struggles vulnerable children face can have long-standing consequences, including limiting their achievements and keeping them trapped in a cycle of poverty. TLG has 20 years experience of helping to bring hope and a brighter future to children who are struggling. TLG has various sort of education centres which offer a lifeline to young people excluded from school. Services include early intervention, which offers one-to-one coaching in mainstream schools, make lunch fills the help with holiday hunger gaps for hundreds of children that really are in need. This is a long-standing client of the bank, and it's taken 7 loans from us over the sort of last 17 years that it's worked with us. So it sort of now helps around 5,000 young people across the UK. The original loan that we did was to purchase a light industrial unit, which the charity converted into a sort of training and recreational facilities to expand its work with young people. Subsequent loans have enabled the charity to build its first centre of excellence, and most recently to buy additional office space. Okay, YMCA Birmingham. So we have quite a good relationship with the YMCA network nationally. We do a lot of work across various YMCAs or with various YMCAs around the whole country. I work with about 6 personally. And you know, people know the name and the brand of the YMCA, but where they sort of come into to their area really is the impact of homelessness is kind of considered long-term and life-changing. It can affect every part of life, from mental and physical health to education, job prospects and relationships. So the YMCA sort of transition from what it was to a much bigger organisation really, and where it focuses its support. So YMCA Birmingham aims to inspire young people to discover their potential so that they can live life to all its fullness. The charity provides accommodation to support and help vulnerable people towards independent living, while also providing employment training and workplace experience through its social enterprises and employability projects. We've provided, again, quite a few loans over the years to YMCA Birmingham. Our first was back in 2015, which supported the development of a vineyard housing scheme to provide 34 flats for those in need of affordable accommodation. A most recent loan enabled the charity to purchase a property it was renting when the landlord indicated the intention to sell. This created another 24 flats for people, to help people with a history of homelessness make a successful transition to independent living. I mean, the social impact in all these organisations, it just looks second to none, really.
Lee, sorry to interrupt you. I'm just conscious of the time.
Yeah.
And we've got. I'm thinking that this is sort of coming towards the close of your presentation.
It is. Yeah.
And we love Adrenaline Alley because they're local to us as well. But we've got a question in the chat from Becky, who asks, "What if you don't have anything you think could be offered as security, i.e., no buildings or no major assets?"
Yeah, no problem. That's a good question. So the bank will look at lending up to £50,000 unsecured. So I did say we start at 50,000, but that is for secured lending. However, this is the sort of part of the funding world where the responsible finance providers come into their own, because responsible finance providers, and this is where we'd signpost to maybe other organisations, can provide up to, in some instances, £250,000 unsecured. So they're backed by quite a lot of government money to allow them to help support organisations where essentially banks can't, because for that reason you just said there's no assets to use as security. Now there's some big sort of funders out there. Big Issue Invest is quite a well-known one, quite well regarded one as part of the Big Issue group. It's got a social funding arm, and it'll lend up to, in some instances, £3 million, 50. So there is ways of meeting. Hopefully that covers the.
Okay. You all froze for me there. Are you back? Are we back together? Lee, I'm just going to close your... I'm going to just close your presentation, if that's okay. And go back to the gallery just to see everybody. And right, so yeah, sorry, Lee, just the time's marching on, and people might be wanting to go to the following session, and I'd like to try and leave a few minutes between sessions. But we are a small group, so if you want to unmute yourselves and ask anything, it's very interesting, Lee, to look at this in terms of because many charities and community organisations wouldn't ever consider taking loans on, but it's more evident from your explaining, again, particularly around housing providers who can put their business model together where they can see income through tenants and service users coming in with some security that enables them to have a budget to include repaying the loans. Is that the general picture that you see? Well, I think Lee seems to have dropped out of the picture. He's gone. He did say to me earlier that he'd had trouble this morning with his Zoom, but I suppose at least he managed to last out. Hopefully he'll bounce back in. And Becky, your question, of course, around your service, where you'll have projects going into the future, and I imagine that you'd like to have secure space for having places to do filming and etc. Is that what you're thinking?
Yeah, I mean, thinking about many things, to be honest, but and we may have some assets in the future, but it's always been one of those things that we have films which are very intangible assets and not things that people tend to lend against.
Yes, and I suppose from what Lee was saying, it's about having that conversation with them, because if you don't ask, you don't know, and if you don't have the conversation, yeah. But it's useful to be reminded about the fact that Charity Bank are there, and that they are there for the sector, as well as putting money into deposits. When an organisation is building its reserves, there might be a better return on savings there. I don't know. It doesn't seem to be. And he's just messaged me to say my laptop's given up trying to get back in. He may join us. Here he comes.
I wouldn't mind asking him a question, Sean, if he's
Yeah,
back.
absolutely.
Thanks.
Here we go. Welcome back, Lee. Can you hear us?
Huh?
Welcome back. Sorry, at least you mentioned earlier to me that you were having some tech problems, but at least you've got back in and you lasted through the presentation. We've got a question from Pratima for you.
Hi, Lee. So just for
Hello.
what it's worth, support Northampton banks with cash. So that's a
Okay,
good-
yeah.
I know that doesn't give us any leverage at all on grants or loans, but it was just that it was more of a comment really that we did consider kind of social investment for an IT platform.
Okay.
Can
Yeah.
you hear me, Lee?
Yeah, I can hear you. Don't know if you can hear me. Yeah.
And it was just a kind of wider comment I think Sean was alluding to earlier, which is it's so risky for organizations.
Sorry, I think I'm up.
Can you hear me?
Are you still there, Lee? Hi, Lee. He's obviously having some problems, but what we will do is we'll write around with Lee's email, and let me just. I'll just put that into the chat. Lee, are you there? It's ljagger@charitybank.org. So Lee's bounced out again. So I'm going to bring the session to a close, folks. Thanks very much for joining. I hope that you found that interesting. It's certainly been something we're delighted to have had Charity Bank join the funding. Lee's back again. Lee, we're on the verge of closing the session down now. Pratima did have a question and comment to you, but she'll probably email you. I've put your email in the chat, and I know that Becky may well also be in touch with you as well, and anyone else. But Lee, thank you. It's been great to have this dimension to the financial world for the charity and not-for-profit sector. So Lee, thank you. Thanks everybody. And we're coming, it's the last afternoon of our funding. I think I've got the last session. Maybe I'll see some of you there. Okay, take care everyone. Bye-bye.
Sean, can I keep you on for a second?
Yeah. Hi, Shannon. Lee, are you still there? Just to say thanks very much.
Did you want to stop recording?